Hello, fellow traders. 'Tis I, the rumpled one. Trading facts versus fiction. The myths. Oh, yesterday I went to a free webinar by Dr. Dayton. Now, there's a MP3 that I listen to just about every trading day. I like to start my day out with it, and it's a interview with three different trading psychologists, and one of them's Gary Dayton. So when I saw he had a free webinar, I decided to partake in it. And so I'm listening, and the psychology stuff is really good. He talks about some of the different biases that we have, the recency bias and things of that nature. But then he made what I believe to be, and really what I know to believe, some of the errors that and perpetuate myths that I just can't take it. So of course I had to say something. Number one, in trading, there are no probabilities. You see, when you roll the dice, there's probability. We know the probability that you're going to roll snake eyes is 1 out of 36. That's a probability. You flip a coin, heads 50, tails 50. That's a probability. But when you enter a trade, there is no probability. Okay? You don't know if that trade has a 50% chance of winning or losing, or if the price is going to go up as a 50% chance of going up or down. There is no probability when it comes to trading. I mean, it's either going to go up, down, or stay the same. That's true. But we cannot assign a probability to it. Probability deals with the future. What we can do in trading is we can compute or accumulate or calculate the statistics. So for example, I know in the wick zone for certain pairs, if price gets into the wick zone based on statistics, over 70% of the time, it's going to leave. But that's not a probability. That is a statistic. Because every day we rerun the calculations. So if we're using the last 100 days, maybe today it's 77. Tomorrow or next week it could be 75 or 79. Because it is a statistic. But probabilities do not change. You roll the dice today, you roll the dice tomorrow. The chance of rolling snake eyes is still 1 out of 36. It's that simple. And it just drives me bonkers when these guys talk about probabilities in trading. Now, little background, I took statistics in college and I aced the class. In fact, I scored 105, so they couldn't grade it on a curve, and I wasn't well liked. It's just that simple. And the only bummer it was, I had 105 going into the final. I was a graduating senior, and the guy wouldn't let me. I still had to take the final. It's just like, come on. I had to take 3 finals that day. It was brutal. But anyway, that's just a side note. So that's just one of the things he said. Then he went on and he started talking about multiple time frames. Well, I started out down that path with the radar screen and trade station, and then I even did some of that same work with the multiple time frame or chart period indicators like my multimeters. In fact, I just wrote another one today. But I am no longer deceived. Price is the same on all time frames. And it's that simple. And I've showed this before and I will show it again. What's the price here? It's 110,818. That's on the H1. Okay, it just went up a couple of pips. But you see here, It stays the same. It doesn't matter if I'm on D1, if I'm on M1. Okay? It just went up to 82.5. Look, I'm on the monthly. It's that simple. Price is price. You put a horizontal line on the chart, and guess what happens? If you change time frames, it doesn't move. But, you say, well, you look at the trend. There is no trend. Trend only exists in the mind of a trader. It is a concept. It doesn't exist in the real world. It's conceptual. And then I had to correct him because he's talking about time frames. Candles are just data points. That's all. When we trade, there's ticks. Every tick. The only true chart is a tick chart. What is this M1 chart? It's all the ticks starting from this minute. That's all it is. And it opened here. It moved up to a high. It pulled back now. So all the ticks that happen during this minute create this candle. All the ticks that happen during this hour create this candle. Candles and bars are nothing but compressed data, compressed ticks into a form that conveys some information. We pick arbitrary start times, whether we look at H1 or M5. We're going to say, okay, give me all the ticks that started at what? 2300. Okay, we're going to look at all the ticks that started, and we're going to make a candle. And then at 2305, we're going to do the same thing. It's arbitrary. It's all the same data. It just depends on how you slice it. You can zoom in, like on the M1, or you can zoom out, like on the monthly. But it's still all the same data. It's just this data is compressed a lot more than this data is compressed. That's the only difference, but price is the same. So when you talk about something like support or resistance, once again, it's a concept, because he says, well, they were looking at the support or resistance on the H1 chart, but what they failed to do was look at the what was going on the D1 chart, and they would have seen blah, blah, blah. It's just like BS. I'm sorry if I'm sounding emphatic, but that's because I am. Because it's BS. It's real simple. If you have the H1 chart and this is all the data you're looking at, well, maybe if you scrunch it up, look, you would have seen this. The same thing it showed you when you were looking at the daily chart. Does that look familiar? So this is why I say these guys are out there and they're spreading these myths and they're just fooling people, and they're making a lot of money doing it by selling their seminars, their webinars, their books, their tapes, their indicators, and it's just wrong in my opinion. That's my opinion, but I can back my opinion up with facts. It's not an arbitrary opinion. As who was it? Was it Deming that said, if you don't have data, it's just an opinion? I've got the data. It's that simple. I've got the formulas. So, it just flabbergasts me. And I guess that's why so many people don't like me out there, because I buck the system, because I don't believe in their myths. When they talk about trend, they talk about supply and demand, which once again is a concept, because you can say, well, you see here, this was the supply, blah, blah, blah. Well, what happens when it blows through it the next time? Well, yeah. It's real simple. If I say here's a horizontal line, and if price gets down to that line, I'm going to buy it. Here's a horizontal line. If price gets above that line, then I'm going to short it. I don't need to give it a name to try and sound like I'm some professor or doctor or, something that I'm not, because it doesn't mean anything. It's real, some things are just so simple. You see this? Price is in what? It's in the wick zone of this candle. Now, price is either going to stay in that wick zone or it's going to leave it. It's that simple. What else can I say? Price goes up, price goes down. It's like I've written before, and all you need to know about trading, there's only two types of trades. Either price is going to reverse, right? Or it's going to break out or crossover. What's the difference? If price comes up, hits this point, this high here, and comes back down, it reverses. If price goes across that line, it's either you can call it a breakout or you can call it a crossover. They're pretty much the same. No matter where you draw the line, if it crosses over, it crosses over. At the bottom, you might call it a breakout. At the top, you might call it a breakout. But a breakout's just a form of a crossover. I guess it's a special case. So, I mean, really, I just have to set the record straight. I just feel compelled to do it because I just can't stand to hear this stuff being perpetuated. And especially people think, oh, well, this guy's a doctor and he's written a book and blah, blah, blah. He must know what he's talking about. It's like, yeah, when it comes to psychology, hey, it's like I said, I listen to that video or MP3 or MP4, whatever it is, just about every trading day. I listen to that one, and I listen to one about Evan Longoria. And, because when I do, it just reinforces certain things. Like in the Evan Longoria, I even got a little 3x5 note card. It says, stick with the approach. It's just like, yeah, you see your setup, don't change it, just stick with it. Okay, especially if you're losing, if you've had a bad day or bad week, bad month, don't be so quick to abandon your method because you might be making the mistakes. The method might be the method's not failing you, you're failing the method. He says keep the routine going. Yeah, that's what I do. Keep it going. Get into the game. Hey, if you see that signal, take it. You got to get into the game. And you don't worry about the results. Don't try to outthink it because you can't outthink the market. He says, be where you need to be when you need to be there. Hey, if you're in a trade and it's been a tough trade, you need to be sitting there. So if you get a chance to exit, you can take that exit. And get rid of those negative thoughts. I mean, if you keep thinking negative thoughts like, oh, it always does this, always does that, you are going to drive yourself bat crazy, okay? Just stop. You don't need to do it. I mean, the market isn't out to get you. It's not out to get me. The market doesn't even know we exist, really. Part of the market does because we're traders, but in general, it doesn't know we exist. So, I mean, really, I don't know if you want to call this a trading rant video or what, but hopefully you may have learned something from all of that. Even if it's just one little piece, it might make all the difference in the world. I've had a couple people contact me recently and saying, hey, because of your methods, I've settled down. Because of your methods, I'm making money. Because of your methods, I found my way. It's just like, I love to hear that. That's great. Because it just, to me, it just reinforces, that, hey, I'm on the path. I'm helping. People go, well, if you're this so great, you could be rich, and why are you, giving indicators, or why are you begging for donations, or why are you, there's always somebody out there that's going to criticize what I do. And personally, what they think of me is none of my business. It really isn't. I'm going to keep doing what I do. I'm going to play my game. I'm going to trade my systems, my methods, and I'm going to do what I do. And either people like it or they don't. And if they don't like it, if they want to trash talk me and flame me all over the internet, especially on forums that have banned me, well, so be it. It doesn't really bother me. So, fellow traders, I hope you've gotten something out of this video. And as always, it's not what you trade, it's how you trade it. TheRumpledOne signing out.